This interview is a paid advertisement. It was produced on behalf of the company and is considered investor relations activity under Canadian securities law. All statements and opinions are those of the guest and should not be construed as investment advice. Please do your own due diligence or consult a registered investment advisor. Hello and welcome. Thank you so much for joining us here in Frankfurt on site. My name is Kai Hoffman. I'm the @JR Mining guy over on X, and of course, your host of this channel. And I'm joined by Sam Lee. He's the president and CEO over at Northisle Copper and Gold. Sam, it's great to see you. Thanks for coming to Frankfurt.
Great to see you, Kai. Thanks for having me.
How are things?
Things are great. It's obviously a good market, but we've been doing a lot of things to take advantage of this good market. So yes, very good.
Perfect. We'll get into that right now. We'll get started right away. First time on the program, run us a bit through Northisle. Give us a 60-second overview. Who are you?
Sure. I'll start who I am. I'm Sam Lee. I'm president and CEO of Northisle Copper and Gold. I started this about 5 years ago, prior to which I was a metallurgist, but I spent 20 years as a banker at CIBC. This copper gold project, is based in British Columbia on the north end of Vancouver Island. We boast a preliminary economic assessment results of about $2 billion after-tax net present value with a 29% after-tax rate of return. For over 29-year life of mine and a 1.7-year payback. So all in all, this is a very significant copper project with a massive gold credit.
Fantastic. Yeah, and we look at each other, by the way. No, it's fantastic. Like, run us a bit through the cash position and the capital structure I was going to ask, because you got $43 million to spend. Indeed. So run us through that. How did you get to that point, and run us a bit through that?
Oh my goodness, that's a wild question. So
and we got time, you know.
Okay, fantastic. Well, I started it 5 years ago, and I have to say, those 5 years were very, very eye-opening. As I said, my background is an investment banker. I was very much an institutional crowd type of guy. And clearly our industry has suffered for quite some time. We haven't been in the current environment, certainly since the 5 years I've been at the toe. So capital has always come from strategic partners, strategic investors like Michael Gentile, like my chairman, Dale Corman, Mining Hall of Famer, myself. I've put in about 5% of my own personal capital into the company. Sorry, I say 80% of my personal capital into the company, equating to about 5% of the company. And so that's how we survived, and that's how a lot of the junior space survived. And you know, every year we would raise about $10 million, and about 7 of that 10 would go right into the ground, drilling. And every year we would see about a $35 to $40 million appreciation in our share price, even in a terrible environment. And that's because we have a very prospective 35-kilometer land package. So as shareholders, we always think we need to see at least a 3-4x return on any dilution capital that we see, and we'd like to see it sooner rather than later. And we've been successful in doing that. And so now that we've had an accumulative success culminating the PEA that I just talked about, we were able to raise approximately $40 million with 9 institutions and Wheaton Precious Metals, I apologize, as our cornerstone investor. And so this is really a coming into the party type of offering for us. In the sense that, you know, this is the market sanctioning our project, giving us good value for it today, and then saying, here's $40 million and get on with it. And so, you know, I would maintain our discipline around expecting those types of returns for the level of dilution that we assume, because we all still remain very significant shareholders of the company. So stay tuned. There's a very bold plan.
Fantastic. Yeah, run us a bit through like the financing itself. Like, how did that go? I'm trying to get a bit of a sense for, you know, investment attractiveness, like sense for the market as well. Sure. Were you oversubscribed?
Oh, absolutely. We upsized actually. So, as I said, this was a very atypical financing from the previous financings, where in the past we always would have like one new institution that believes in the story that we were able to influence over the last, you know, 6 to 12 months of marketing to come into the story. This had 9. So,
any significant names that we might recognize?
Yes, you'd recognize all of them. They're from the U.S. And Canada, and these are the largest gold and precious metal funds and base metal funds in the world.
Fantastic.
So I think that again is a bit of a acknowledgement that the project is worthy to be expedited quickly. The plan has always been twofold. One is to establish a strategic consortium group that will take a partnership interest, similar to our cornerstone investors, that will help us get through to FID, final investment decision, and beyond. So you can imagine the 4 buckets that are included in that would be finance partners, including streamer off-takers, for which we've already identified one. The second would be strategics. It would be people that bring significant not only capital but also operating expertise and political breadth and depth to advance the project on an expeditious basis. And the third would be sovereign wealth funds, which in Canada there's only a few, so you could guess who they are, but they're obviously well funded, and their strategic modus operandi is to be invested in every critical metal project in Canada, every major project, resource project in Canada. So most of these buckets actually fall into a pre-feasibility study and above. And that's what we've just been funded for, effectively to get to pre-feasibility study and baseline and permitting, advanced permitting work. So we believe, again, this has been a transformational period for us in terms of how the market views us, how we have access to capital. And that transformational period, we believe, is going to lead to exponential outcomes on our strategy.
Did any of the money come with strings attached to Wheaton? Did they get a ROFR, right of first refusal when it comes to offtake agreements, streaming deals, or anything like that?
Yes, they got a right of first refusal, which was something that they required as part of any equity investment. They typically don't go into straight equity, but for their appreciation for projects and management teams. And that's exactly why they got involved with us. We obviously would love being part of their brand because they are not only the second largest mining company in Canada, they're the largest company in British Columbia, largest publicly traded company in British Columbia, which brings a lot of breadth and depth to our political activities around ingratiating ourselves and potentially expediting our project. So we believe a ROFR is exactly what it stands for, which is a right of first refusal, which means we have not sold the stream, we have not sold the royalty, we are not obligated to sell the stream, we are not obligated to sell the royalty, and we have given a ROFR that has a reasonable term to respond, or at least reasonable time to respond to an offer. And the person that we've signed it with is one of the largest companies in the world from a mining perspective. So the idea of them, clipping the ROFR and shorting our stock or selling our stock, people don't understand that what they invested in us, they cash flow on a daily basis. So this is truly one of the largest, if not the largest, companies that we could get endorsements from. They obviously are extremely aggressive. They're the highest growth streamer and royalty company in the world, and they've become that because of their aggressive and behavior and extreme wisdom and foresight on opportunities such as ours.
Yeah. No, absolutely. Let's talk about that opportunity. Let's talk about what got them excited. You're a PEA stage company. Run us a bit through the PEA to give us the key highlights and, of course, what do you want to improve on and things like that.
Sure. So the PEA is quite simple. It takes a phased modular approach, similar to how Blackwater Artemis was developed over the last 5 years. And for those that don't know, Artemis Blackwater was a large project that essentially got broken up into modular phases. And they started obviously with a phase one with 20,000 tons per day. Well, we are starting with a 40,000 tons per day project because we can. This is a much better environment, commodity environment, than when they started their project. They showed excellent execution around developing the mine in a reasonably short period of time. And we've just announced Kevin O'Kane as coming down out of retirement from our board to be our Chief Operating Officer. He's spent 37 years at BHP developing some of the most formative projects in the copper space in the world. And so to have that executional excellence as part of our plan is critical in getting our value re-rates and certainly getting to the point where certainly what we see at Artemis at this point being over a $6 billion company. The phase one effectively stimulates our return. Again, it's a 29% after-tax internal rate of return. This is all done at a $4.20 copper price and approximately $21.50 gold price, which seems comical, but this study was published in February only of this year. So if you were to flex that to, which is what we're allowed to do as per 43-101 regulations, to spot at the time, which was 2,950 gold and approximately 450 copper. This is a $5 billion after-tax NPV with a 45% after-tax rate of return for a 29-year project. So I argue that, and it was part of my past business to review these types of projects. I haven't seen a preliminary economic assessment study like this for many years, if not decades. So that's why the market has sanctioned us. It's a large project with a very attractive low capital intensity, a very low payback period of 1.9 years. That gives you a return of nearly 30% after tax at base case and over 45% at $2,900 gold.
What are you doing to get to the PFS stage now? You've got the money available now. You've got about 40 million, 45 million in the treasury. How much are you going to spend to get to that PFS level, and what do you need to do?
So what we've allocated of the $40 million is approximately $35 million of infill drilling, of geotechnical drilling, of a bit of step-out drilling, and obviously metallurgy. We will be conducting variability testing, which is pre-feasibility study level appropriate. And then, of course, we'll put an engineering report around that as well. So the project outline will stay very similar to what we had in the PEA. The big difference is that we will be adding another resource to it, and the market has been following this in earnest. It's called West Goodspeed. That area was discovered right after Northwest Expo was back in 2023, late 2023. And so therefore it didn't make it into the PEA, but we've now released 2/3 of our complete drill program, which we have completed. And that has now shown the continuity of very good grades across almost a 1 kilometer strike length. And the last batch that is meant to come out shortly will be focusing on the northwestern portion of that envelope, which is the higher grade portion of the envelope. So we look forward to those final results, but we maintain that this is going to be an area that will be certainly included in our PFS, and we continue to believe it's going to have a very strong impact on economics.
It sounds like you don't really need to do any exploratory drilling, but how much wildcat versus like infill drilling are you going to do this year?
So need is a reference point in perspective of some, but I do think that if you were to look at our board, right, which we have 2 mining Hall of Famers, we added Alex Davidson to our board of directors. For those who don't know Alex Davidson, over 35 years with Barrick, obviously he's grown American Barrick to what Barrick is today. Someone that clearly is focused on district scale opportunities. I think the market, and sometimes us, we all get seduced by how good is a project, blah, blah, blah. But I can tell you for a fact, because I advised all of these companies, that what the largest companies in the world are focused on are world-class districts, right? There are very few, if any, world-class projects. They're all in the majors right now. They're all being mined by the majors right now. But the next leg of growth for, if you're a company that's $100 billion, is a district scale opportunity. And that's what we have. We have a 50-kilometer district, which includes, it's a porphyry district. The definition of a district is multiple porphyry centers. Well, we have 5 deposits and 1 mine, historical mine in the Island Copper, across this 50-kilometer district.
That was an ex-BHP mine? It
was an ex-BHP mine. It was mined for 24 years. And so this is by definition a bona fide porphyry district. What we have is an analog, a recent analog on how a district like the Vicuña district has gone from $100 million, which is all three projects in NGEX in 2017, to $15 billion today, crystallized district by the Lundin Mining and BHP and NGEX. So we understand that district plays are where the growth opportunity is. We believe our PEA shows the value opportunity, and I think people understand how you can re-rate as you progress through the de-risking phase to get to an FID. That's our value proposition. Our growth proposition is the district, and we now know the analog that exists in today's environment that provides the return opportunity for that district. So our plan is very bold. We're now merging on a $500 million market cap company. And so therefore we should be thinking more like a $5 billion company as opposed to a $50 million company. And what we've been blessed with is 35 kilometers of that 50-kilometer porphyry district. What we've been blessed with is we've had over 70 years worth of data, including geophysics, IP mag. We've got a $30 million surface sampling program that we inherited. We added another $5 million to that program. We have stream sediment sampling programs across that 70 years. We are now collaborating with Stanford Mineralex to be able to help us process, synthesize, create these correlations for this data to help us eliminate the false positives from the correlations, and then to develop the causation effects, and to do it with data that overlays, again, 5 existing deposits and 1 actual mine, is incredibly helpful and useful to converge on a higher probabilistic chance of finding that needle in a haystack, right? And that's what growth is. That's what growth is defined as. It's outweighted returns off of risk. But I maintain, being obviously a significant shareholder of the company, and Dale being the largest shareholder of the single largest shareholder of the company, that this is a very attractive risk-adjusted profile because we have the value opportunity in progressing the project to project sanctioning to FID. That is the basis, fundamental driver of our valuation, where we could get from 0.1 times multiples to 1/1 times multiples in a reasonably short period of time. That's allowing us to access the market in a way where we could take these big shots and big swings around very informed, logical fact patterns around, again, trying to find the needle in the haystack. What we know is it takes 1% over 1,000 meters, 1% copper equivalent over 1,000 meters. What we have is not only the first 30 years of the proposition, but if you go through our historical drilling, what we have is that 1% copper equivalent intercepts over, call it 100 meters, in the top part of the porphyry system at surface, right? And what we know, theoretically, is that porphyries, the stem of the porphyry, the potassic zones, that's where the enriched portion of the source of the hydrothermal fluids come from. And we know that it's typically at depth, unless it's been vaulted up or eroded out. And what we know is we do have that potential in our system because we have the lithocaps across our district, which is another fundamental difference between our project and any other porphyry project in BC, is that nowhere else in British Columbia do you see these lithocaps. It's only on the island where you see these lithocaps, and every major company in the world, when they look and explore for porphyries, are looking at that lithocap. So all that to say, this is an extremely, I think, well risk-adjusted opportunity that we are now in the enviable position to go after aggressively.
Fantastic. Maybe one last question in terms of risk and de-risking the project is permitting. We have to talk about it. You're in British Columbia. You're on Vancouver Island. What does that look like?
So I'll revert back to our board. That's now seen over 5, 6, 7 decades of ebb and flow of permitting and social license and political will around natural resources extraction. So if you look at our chart, you'll see what I'm talking about in terms of people who have that historical experience. So in my 30 years experience in mining, the mining industry, I have never seen such political alignment for natural resource projects across the board, in terms of First Nation governments, in terms of provincial, federal, municipal governments. Okay, and that's only a 30-year period. My chairman, who's 87 years old, in his 70-plus years of experience, the only time he's seen this level of political alignment was in an era that Canada was undisputedly one of the largest and most prolific mining jurisdictions in the world. So from a permitting perspective, we are in completely, at least in my lifetime, uncharted territories, which makes this part of our strategic decision-making process. We are not haphazard in terms of spending $40 million to go through a permitting process. By the way, that portion of that $40 million is going to be to try to accelerate that timeline as well. So we are not haphazard. We understand that it's a pretty expensive endeavor to ensure that all governments, including and especially First Nation governments, are on board and on side for this project. We understand that is what gets considered as it relates to expedited behavior in British Columbia. We are one of the 18 priority projects in British Columbia already because of our intersection between infrastructure that's already a sunk cost that the government has already spent because of the Island Copper Mine, because of the critical nature of our project, and because we take a consent-based approach to our First Nation governments. And so we believe that of that 4 have already been announced as expedited. 3 are producing projects, 1 is a development project, and we believe of the remaining 14, we are among the top of that list. So I think that perhaps perception is sometimes reality, and right now we are perceiving this being an extremely positive environment to move projects like ours, critical projects for commodities that the world needs. We believe that this is the environment to move those projects forward.
Absolutely. No, fantastic. Sam, last question, near-term catalysts, more drill results from West Goodspeed?
Yes. So the next few weeks, West Goodspeed, again, in that high-grade zone should come out. That will confirm, hopefully, and are already 23 holes that we've released at it, that this is a continuous zone of a significant strike length, that we can then develop an internal resource to be included in the PFS. We then will be completing our infill program, geotechnical program, engineering drilling. So in total, it'll be about 30,000 meters for the year by the end of the year. And that will be obviously released in logical sequence when we get those results. And I do have to say there are a lot of high-grade zones within the pit shells that we need to infill that effectively have now been assumed as low-grade zones. And our objective and our belief actually is that we can continue the high-grade zones of this. So there is actually a very strong possibility that we can increase the NSR value per ton zones in the infill program. So it's not just all boring infill program. And then finally, in second last, we'll release our metallurgical results, our variability testing in Q1 or Q2. With the expanded resource estimate, global resource estimate, including West Goodspeed by Q2, and then the final pre-feasibility to come out by the end of the year. In addition to that, we are going to be working on the district scale plan. We're just in the final strokes of finalizing it and getting it approved by our technical committee, which includes Alex Davidson, Dale Corman, Kevin O'Kane, and myself. So 4 very different perspectives on what is attractive from various different reference points. And if it passes, obviously mustered among those 4 perspectives, we will unveil that plan to the market in Q1 of next year. And the market will help us decide on how we progress with that plan. But, I can say with a great deal of confidence today what we're presenting here at the conference and what I believe is that the story around the district play opportunity, the growth proposition, coupled with the value proposition that we currently have at the North Island project, is something that the market just does not recognize right now, not even close. And it's something that we can actually point to a number of analogs that shows that district scale opportunities, that's the way that you get to world-class assets as quickly as we'd like to get to.
Absolutely. I think district scale, in general, in our industry, is way overused. I've seen postage stamps of projects that have the district label on it, and that drives me nuts. So you have a true district scale. I've been to the project. Their size.
And we have 100% ownership of it. I think that's the other key of it. Our district at this point isn't shared with anybody.
Yeah. No, absolutely. Sam, thank you so much for joining us. Great to see you. Good to see you in person here in Frankfurt. Appreciate you coming on.
You as well.
And everybody else, thanks so much for watching. If you have any questions, any comments, please put them down below. And don't forget to hit that like and subscribe button. It helps us out tremendously, reach a wider investor audience, and we much appreciate it. Thank you so much for tuning in. We'll be back with more. Take care.